I'm Professor Pat Murphy, and I'd like to welcome you to the third Berges lecture for the fall 2013 series. And you can see our distinguished panel. I'll introduce them in a minute, but the topic for tonight is greed and taxes in business. And we have three panelists, and they're each going to give a short presentation. Then we have table here in the front where we'll take questions and answers from the audience a little bit later. So our first panelist presenter is Brian Levy, who joined the Mendoza faculty in 2007 after a 20-year legal career focusing on building corporate ethics and compliance programs. As those of you that are his students know, he teaches undergraduate business law and several ethics classes. He is a recent recipient of the Edmund Joyce Award for Undergraduate Teaching Excellence. He served as Fannie Mae's Vice President for Ethics. He was Deputy Ethics Officer at MCI, formerly WorldCom, and now for those of you who like to follow corporate trivia, Verizon Business. So Brian is a graduate of this college, a BBA from Notre Dame. He has a JD from Catholic University and a master's degree in law from George Washington. Please join me in welcoming Brian Levy.
Okay, why don't we get started? When Pat first asked me to do this, my attitude was sort of thanks but no thanks. I thought about it and I sent him an email and I said, look, you need at least one hardcore tax guy or gal who's of the opinion that a taxpayer is under no duty to pay anything more than the law requires. And in fact, paying anything more than the law requires is inconsistent with an officer or director's fiduciary duty. I'm not really that guy. And he sent us an article about Apple's tax practices, and I thought about it a little bit. I read the article. I went to talk with Pat, and it turns out I am that guy, okay? Not proud of it, but I am that guy. So our panel today, our topic is greed and taxes in business, so we need a definition. Greed, the common thread here that runs through all the definitions, is excessive. Excessive desire to acquire or possess more than what one needs or deserves. Excessive desire as for wealth. So that brings up a question, what's excessive? Let's hold that thought for a minute. Turns out I'm a lawyer. I'm a member of the DC Bar, so I have some professional obligations. I'm governed by the DC rules of professional conduct, some ethical canons, if you will, for lawyers. Under our adversarial system, a lawyer shall represent a client zealously and within the bounds of the law. So another definition, zeal, fervent or enthusiastic devotion, often extreme or fanatical in nature as to a religious movement, political cause, ideal, or aspiration. So as a lawyer, I'm going to be a zealot on behalf of my client within the bounds of the law. And what may seem excessive to others may not seem excessive to me. So let's look at the law. A lot of our corporate law comes to us from Delaware. A lot of our corporations are incorporated in Delaware, so the Delaware Chancery Court, very important in setting precedent. Case from 2010, the judge describes what an officer's and director's fiduciary duty is. Having chosen a for-profit corporate form, the directors are bound by the fiduciary duties and standards that accompany that form. Those standards include acting to promote the value of the corporation for the benefit of its stockholders. The Inc. after the company name has to mean at least that. Now, I think there's a little bit of a misnomer that an officer or director's obligation is to maximize profit. That's not entirely true. The standard is a little bit lower than that, but they do have to promote value. They do have to promote value. And when it comes to taxes, here's what that means. Anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the Treasury. There's not even a patriotic duty to increase one's taxes. This comes to us from Learned Hand, a famous judge. What a great name for a judge, right? Learned Hand. What else did he say? About a decade later, he had another tax case that came before him. over and over again. Courts have said that there is nothing sinister in so arranging one's affairs as to keep taxes as low as possible. Everybody does so, rich or poor, and all do right, for nobody owes any public duty to pay more than the law demands. Taxes are enforced exactions, not voluntary contributions. To demand more in the name of morals is mere cant. I had to look up cant. I didn't know what that meant. Turns out it means hypocritical and sanctimonious talk. So what does Apple do? Just for example, a lot of our multinationals have been in the news over the last year for their tax practices with respect to foreign income. So accounts vary when you read about Apple's tax practices, but at least one version indicates Apple flows foreign revenue through Irish subsidiaries. And Irish law asks where a company is managed and controlled for purposes of where they pay taxes. So the Irish look at an Irish company that's managed and controlled out of Cupertino, California, and they say, you pay U.S. taxes. The U.S. looks at that Irish subsidiary, and they say, you're incorporated in Ireland, you pay Irish taxes. So they end up paying no taxes, okay? If neither country regards a particular corporation as a resident, no tax treaty mechanism assigns tax residents. Apple's Irish subsidiaries are citizens of no country for tax purposes, resulting in little or no tax. All right, so some of you probably don't like this arrangement. If we don't like the law, we should change it. Before Abraham Lincoln was our 16th president, he was Honest Abe, an attorney. There was a time when honest lawyers roamed the earth. Abraham Lincoln was one of them. What did he say? The best way to get a bad law repealed is to enforce it, or in this case, obey it strictly. So let's look at the tax code. It's too long and too complex. First passed in 1913, it was 400 pages. By 2011, it was over 72,000 pages. And in all candor, I'm going to out our panel members here. We probably have about 9 degrees between us. We couldn't quite figure out what the tax code was, okay? Is it just the Tax Act? Joe remembered from law school that the original Tax Act was 14 pages, so the code must be something else. If you say, well, it's probably the law plus regulations, that can't be it. That's 1.3 million pages. The point of this isn't what the tax code is. I think it's Title 26 of the U.S. Code, is that it's too long and too complex. U.S. corporate tax rates are too high. We have the highest rates, a 35% U.S. corporate tax rate in the U.S. It's the highest in the OECD, the Organization for Economic Cooperation and Development. The average OECD rate is just 23.6%. Our neighbor to the north, our largest trading partner, Canada, they're down to 15%. That's down from 29% in 2000 and 16.5% in 2011. And just as a point of comparison, the Irish, they're at 12.5%. Aaron go bragh. All right, by now you think I'm some like conservative Fox News wannabe, right? So let's do this. Instead of saying, I think maybe a lot of people agree from both sides of the aisle that the federal government spends too much. Instead of going after healthcare or entitlements, let's go after defense, a favorite conservative topic. We spend too much money on defense. And I'm not going to recommend to a client that they voluntarily subsidize it by paying more than they owe. The U.S. government spends more on defense, $698 billion, than the next 17 nations combined. Almost 6 times more than the next biggest spender, China. Almost 11 times more than Russia. Under the 16th Amendment to the U.S. Constitution, the Congress shall have power to lay and collect taxes on incomes from whatever source derived. So Congress should do its job and reform the tax code. Until that time, you are under no obligation to do Congress's job for it and pay more than the law requires. Apple paid $6 billion in U.S. taxes in 2012, which is $1 out of every 40 in corporate income taxes collected by the U.S. government. If I were to advise Apple to pay something more, what would it be? Would $7 billion be enough? $8 billion? $10 billion? And remember, Apple shareholders aren't just all executives. They're people who have 401ks and IRAs and 529 plans. So as our students sometimes say, don't hate the player, hate the game. Okay? We need tax reform. So Uncle Sam wants lower rates, fewer deductions, and everyone to pay their fair share. And with that, we'll turn it over to Pat to introduce Ken.
Thank you, Brian. Off to a good start. Thank you. So Ken Milani is our second presenter. He's a professor of accounting, teaches required and elective courses in federal income tax in our accountancy department, both at the undergrad and Master of Science in Accountancy programs, as well as the executive MBA program, and previously in the Ernst & Young dedicated program. He does research on the income tax implications of U.S. property interests and owned by non-resident alien partners, among a number of other topics. Ken and I have something in common. We both hold degrees from Bradley University. He holds 2 degrees, and I have one, a BS and MBA from Bradley, a PhD from the University of Iowa. He joined the faculty in the early 1970s, but one of the most significant accomplishments of Ken over his long career here is he started the tax assistance program and serves now as the technical coordinator, but more importantly, he was the founder of a program over 40 years ago that now has chapters in 20, 30 other places in addition to South Bend. So please join me in welcoming Ken Milani.
So Brian was the attorney, and I guess I'm going to take on the accountant's role. And people who are former students of mine or current students of mine or friends of mine know that I have one passion. It's not taxes. It's another 4-letter word called Cubs, okay? Now, what Cubs normally means is completely useless by September, okay? But this year, not so much. We're going to give it a little bit different twist today as we take a look at Cubs. The C is for we comply and cooperate as we hide. I'm a corporate CFO, okay? What does HIDE stand for? Well, we have profitable global ventures. And the reason we're doing that is that the laws were passed to encourage foreign presence in response to balance of trade issues. One of the things the law did, it said, if you set up a branch in a foreign country, you will pay taxes on the profits set up, created by that branch setting. If you set up a subsidiary in a foreign country, you will not pay any tax until that profit comes back to the United States. Now, you know what? That's a no-brainer. Branch or subsidiary. Okay, subsidiary doesn't pay any taxes until we bring the money back. Guess what? We're setting up a lot of subsidiaries all over the world, and they're going to be very, very successful. The I stands for invest. The government says we want you to comply and cooperate. Invest in certain types of property. As a matter of fact, if you invest in tangible personal property, furniture and fixtures, machinery and equipment, that type of thing, in the year 2013, the first $500,000 that you spend will be an immediate deduction. Now, that doesn't apply to like my former employer, Johnson & Johnson and AT&T, but for a small business, a $500,000 write-off is a fantastic tax break. The government also says if you buy certain types of vehicles, we're going to limit the amount of depreciation you can take on those vehicles. So if you buy a Honda Civic like I drive, forget about it, Milani, it's not going to happen. But if you have a Escalade or a Hummer that weighs more than a certain amount of pounds, you get an immediate write-off. So that's why the finance faculty drive Escalades and the accounting faculty drives Civics, I guess, okay? And machinery and equipment, okay? Invest in machinery and equipment, you're going to get immediate write-off, $500,000. That's supposed to change next year. I'm a Cub fan. Wait till next year. It was supposed to change this year. It hasn't changed. Will it change next year? We don't really know, okay? The D stands for We want you to do research and development, but we want you to do that in an incremental manner. So we're not going to give you a credit for every dollar you spend, but if you increase your research and development spending, we will get a credit. Well, my old employer, Johnson & Johnson, and this is still true, 80% of what they sell today, 80% of the products they sell today, will be obsolete in the next 10 to 15 years. They have to do research and development. And so the IRS is saying, well, okay, we're going to pay you to increase your R&D. Now, there is a recent research project I want to tell you about, and that is that a company has developed a talking computer. If you punch in an ID number, it will talk to you at that level of IQ. So if you punch in 90, it'll talk to you about SpongeBob and Sesame Street. At 120, you get like current events. You know, what's happening in the Sudan situation. They just took that cruise ship and turned it upright. At 180, you're going to get some genius stuff, DNA, and they just are creating some brain cells. You know what happens when you pump in 40? It sings the Michigan fight song, Hail to the Victors, okay? And at 200, you get the Notre Dame fight song. So I want to see that one coming down, okay? The E stands for explore and establish efforts that protect the environment. We do all kinds of stuff like that. There is a renewable energy credit. There is a business energy credit. The IRS has been into sequestering a long, long time. There is a credit for sequestering carbon dioxide. And we could go on, and we are saying, yeah, we comply and we cooperate with you. We do those things, they cut our tax bill. But as we go to the U here, they don't do it in a way that's completely unbridled. The credits are capped. And essentially what happens is that you can eliminate your full tax liability, like General Electric did in 2010, didn't pay a penny of tax, despite some nice ratings from Notre Dame football. They own NBC, by the way. They were able to basically eliminate their tax bill completely by using a credit. We also have this thing called the alternative minimum tax. Now, the alternative minimum tax says that if you take too many of these bennies, too many of these things that we want you to do, you're going to pay some more tax. So AMT stands for, in the eyes of the typical corporate CFO, always more tax. It also is considered by the typical CFO as our dues in the club called Bohica. That will be the only thing you remember about my comments tonight. Bohica stands for bend over, here it comes again, okay? Now, if you're a fraternity member, you understand that one, okay? The B stands for the bucks, okay? The bucks involved are very significant. Taxes typically come in at number 3 or number 4 in terms of expenses paid by corporations. Right behind salaries and wages, materials, advertising, and promotion. You know what? We can't even deduct the federal income taxes on our tax return. It is not an allowable deduction. We can't even write it off as a bad investment. But that's what it is. And then the S stands for some societal and other pressures that have created some tax provisions that we do respond to. We invest in low-income housing. Everybody likes to build a nice high-rise condos. Just take a look at what's happening over there by the Martins Plaza, where the Notre Dame alums are buying these places. But to encourage investment in low-income housing, there's a credit. We tell people, rehab buildings, don't tear them down. And there's a credit for doing that. And I bet you if I ask for a show of hands, how many of you live in a city where they took the old railroad station and turned it into a restaurant, a retail shopping area? Okay, yeah. It's happening in Peoria, Illinois, St. Louis, Missouri, Washington, D.C., you name it. You think everybody woke up one morning and said, man, that railroad station would be a great retail outlet. Now, there's a credit for doing that. The major source of that credit in South Bend, Tippecanoe Place. It sat there for many, many years. The credit came into play. All of a sudden, Tippecanoe Place became a quality restaurant. We also search out and hire people from specific target groups. You notice this is IRS here, okay? Those target groups are people that need help. Food stamp recipients, military veterans. Now, as a military veteran, I can tell you that everyone involved in war is wounded. I don't care whether they come out with an actual wound or a mental wound, okay? It's not a very pretty thing. Football is not war. It's a game. End of today's homily. They also say anybody from an economically disadvantaged group, obviously faculty kids, right? That must be the group they're looking at, okay. But now I want to tell you the rest of the story. I'd like to take my tie off now and say that this is what causes my blood to boil as an accounting prof and as a U.S. citizen. And that is that the corporate executive who is on television and who complains about the tax law is telling us half-truths. Now, if I had HALF-TRUTH up here, we wouldn't be out of here till Sunday, okay? So I'm going to go lies, okay? They lie to us because they tell us half-truths. The L stands for they lobby. You know, when the government says we're going to change the law, no, we lobby against it. The I stands for we insist on tax breaks. We argue for targeted tax breaks. Things like enterprise zones. If we have a loss as a corporation, we argued very strongly and we won the argument. We can carry the loss back. We can carry the loss forward. Carry it back 2 years, carry it forward 20 years. So when all the corporate executives were complaining and griping about how tough it was in 2008 and 2009, what they failed to mention on every talk show I ever watched was that they could take those losses and carry them back to 2007 and 2006 and get very healthy refund checks from a U.S. government that was running on empty. And then as Brian pointed out, yeah, we've got the highest tax rate in the world. But you know what? The rest of the world doesn't give out credits like we do. So the E stands for effective tax rates, and the effective corporate tax rate in 2011 was 12%. Give me a break, about 35%. And every time I see one of those talking heads on television, I want to say, okay, tell us the rest of the story. You've just heard it, and that's my comments for the night.
Thank you. Our third panelist is Joe Holt. Joe is Associate Professional Specialist in the Management Department here in the Mendoza College, where he's served on the faculty since 2004. He holds a BA from Boston College. He was 12 years as a Jesuit, completing a number of graduate programs in theology, philosophy, and biblical theology. He also, along the way, picked up a law degree from the Harvard Law School. Previous to coming to Notre Dame, he taught at Loyola of Chicago and the University of Chicago Law School. Here at the Mendoza College, he teaches the foundations of ethical business conduct in both the MBA, EMBA, and the new Master of Science in Business curriculum. He also teaches a number of other courses dealing with ethics and sustainability. And Joe, the floor is yours.
Thank you. Good evening. How are you doing? I'm just going to stand up here and chat. I think I'm here for that can't part, Brian. That sanctimonious and hypocritical, is that it? So I'll try and keep that to a minimum. When thinking about this topic, greed and taxes in business, I had two famous sayings rolling around in my mind. One was that the only two things that are certain in life are death and taxes. And apparently, given Apple's recent maneuvers and GE's, as Ken suggested, for at least a fair number of companies and individuals as well, the statement apparently is only half true. The other one thing I found myself thinking about was the famous line from Leona Helmsley. Anybody know what she famously said about taxes? She famously said, "We don't pay taxes, only the little people pay taxes." This was mentioned to her, during her trial for tax evasion. Now, in her case, she ended up serving time for tax evasion, so what she did was not only unethical but illegal. In the case of Apple, nobody, even their worst critics, is saying they did anything illegal. The question is one of ethics. So how can one think about this topic from perspective of ethics? There are a number of ways, one having to do with the meaning and the effect of greed, one having to do with the general notion of justice, one having to do with Kant's categorical imperative, another having to do with the notion of virtue ethics. So I'll say a little bit about each one of those. Anybody seen the movie Wall Street knows that Gordon Gekko famously said, "Greed is good." What he actually said was greed, for want of a better word, greed is good. So he didn't actually have the word that he wanted. What he in fact was describing wasn't greed, and greed by definition can't be good. As Brian said, it's an excessive desire. Classic definition is inordinate love of temporal possessions, including material possessions, but other things as well. Can be status, can be not so much possessions as the act of possessing. But in both cases, there's a notion of excess. There's a notion of imbalance. And the moral problem is not that the thing I'm loving or desiring is a bad thing. It's the extent of my desire for it. It's the fact that I'm so focused on this thing that it's leading me to give insufficient attention or importance to other things that I also ought to be caring about. From a moral perspective, a problem with greed is that it can tend to undermine one's commitment to justice. Justice is classically giving to others what is their due. But if I want far more than I need, then that's going to restrict the extent to which I'm willing to give others what is their due. Let's say that I'm a parent. As a matter of justice, part of what I ought to be doing for my children is putting enough aside so that I'll have something to pay for their education and so forth. But I'm really, really greedy, and I really want that new toy. In my case, by the way, that would be a new motorcycle. If I really want that now and I really want it badly now, that's going to make it harder for me to do what I know to be the just thing, to set aside that amount of money. Does it make any sense? From a spiritual perspective, greed undercuts charity. Right? In the Christian tradition, charity is kind of the central commandment. Well, if as a result of greed I'm sort of perpetually discontented, that's going to leave me less inclined to give to the poor, to donate to my church, etc. So that is one of the ways to think about greed. Also, I know many of you come from other traditions, and all of the other traditions that would be true as well. I know in Judaism you have the notion of tzedakah, giving to those in need. In Islam there is a parallel concept to that as well. In Buddhism, as a matter of compassion, you'd be concerned for the suffering around you and motivated to do something about it. So in all great spiritual traditions that would be true. That would be true as well. In this case, the question is, what does justice require from companies, and can we say that what justice requires can be reduced to what the law requires? Is that the same thing? The argument is often made, Brian made it tonight, most folks make it, that businesses have no obligation to pay more than what the law requires, and that's absolutely true. What I find myself thinking, though, is a couple of things. One, what if businesses applied that same line of reasoning to their activities with respect to the environment, sustainability, all that kind of thing? Because there are clearly more than a few companies are doing a good deal more than what the law requires in areas like that, or paying their employees or anything like that. Should they, in each and every case, never do anything more than the law requires? What kind of companies would we end up with? What kind of society would we end up with if kind of nobody does anything more than what's legally required? It seems to me also that behavior can be self-defeating on the part of businesses. I gave a talk a number of years ago to a group of 900 investment consultants in Florida. I started out by asking, how many of you would like government to be as little involved as possible in your industry? And at least 900 hands went up. Some people put up 2. So I said that's fine, that's great, but unless you kind of do the right thing on your own, government's going to become more and more involved in your industry. Because unless you do the right thing on your own, they're eventually going to come along and make you do it. And by the way, when they come along and make you do it, they're not going to do that especially well. Partly because they don't know your industries that well, partly because they want to be seen as taking swift action, like with Sarbanes-Oxley. They want to be seen as coming up with something quickly, and as a result of that, it won't be an ideal solution either. So is it even in business's self-interest to do no more than is legally required? I mentioned the notion of the categorical imperative, assuming most of you have had ethics classes as well, but that's Immanuel Kant's famous dictum that you should only act in such a way that you can will that the maximum of your action should become a universal law. It's kind of catchy, right? Rolls off the tongue. I always wonder what life was like for Mrs. Kant. But anyway, did he always go around talking like that? So what does that mean? By acting in a certain way, implicitly accepting that that's an okay way to act. I'm implicitly accepting a certain standard principle on the basis of which I'm acting. So if I cheat on my income taxes, I'm implicitly accepting the maxim that cheating on your income taxes is an okay thing to do. So Kant's dictum says, okay, whenever you're considering a certain course of action, identify the principle, the maxim that you're acting on the basis of, and ask yourself the question, would it be okay by you if everybody else followed the same principle? If so, go ahead and do it. If not, at least a yellow light and maybe a red light. So my question in this case, and it is a question, I don't know the answer, if you ask leaders of the corporations, would it genuinely be okay by you if everybody else, all the other companies, all the other individuals, got away with paying no more than they absolutely were legally required to pay? I don't know what the answer to that question would be. In part because at a certain point you might end up with companies kind of wanting to benefit from certain social goods for which there isn't enough tax revenue to pay. Distributive justice is this question, how do you distribute the benefits and burdens in society? So what is fair in that regard? It's a question we're always kind of wrestling with. And an argument is often made, and a very valid one, that there are many, many ways in which society benefits from business. If I didn't believe that, I wouldn't be spending my life here doing what we're doing here. So that's true, but it works the other way around as well, right? I mean, business benefits from society. Business can't be run effectively without an educated workforce, without great infrastructure, roads, all that kind of thing. Anybody who's lived for a time in a country that doesn't have an effective government knows how difficult it would be to operate a business successfully there. I spent summers in Nicaragua during the Contra War in the mid-'80s, in Nigeria in the late 80s. And in both places, you really couldn't drive on the highways at night because there were potholes that could be anywhere from a foot to 10 feet wide, anywhere from a few inches to a couple of feet deep. So if you're driving along at 60 and hit one of the 10 feet wide, 2 feet deep ones, you kind of break your axle and you're sort of done. So if you're trying to run a big company in a country like that, what are your logistical problems? Just kind of getting things around. The World Business Council for Sustainable Development has a wonderful principle that business can't succeed in societies that are failing. Business can't succeed in societies that are failing. So part of the concern for me is just as a matter of enlightened self-interest as a business, in terms of just your business and your commitment to your shareholders, absolutely, you don't want to pay more than what you're required to do. But what if it gets to a point where there just isn't enough revenue for business, for government to provide all the services that all the companies and us as individuals really need and want to kind of flourish as a society? What do you do then? What would it actually be in the self-interest of businesses to do then? I mentioned the question of virtue ethics. For individuals, when it comes to virtue ethics, the fundamental question is not what should I do in this or that instance. The fundamental question is what kind of person should I become? What is the human ideal I'm striving to realize? And the idea is that it's only when I get clear on that I know what I should do in this or that instance. I should do the things that make me more like the kind of person I want to become. I should avoid doing the things that lead me to be further from that ideal. At the organizational level, you folks are headed for positions of leadership. At the organizational level, the question is, what kind of company do we want to become? What do we stand for? What do we represent? What are our ideals? What's our reason for being? So it seems to me in this question, how much should they pay? How much should they contribute otherwise? Is really a question of what's your level of ethical aspiration? How high or low are you aiming when it comes to ethical behavior? I think about it on the analogy of physical health. There's a difference between not being sick and thriving. I can not be sick, but still not be thriving. When it comes to ethics, there's a difference between not being in trouble and being exemplary. And then there are kind of lots of points kind of in between. So the question for companies is, where do you want to be? Some of the criticism from Apple, I think, is not that companies have always done this, individuals have always done this. It's the scale of it sometimes. Some law professor in California was quoted as calling it unbelievable chutzpah, but it's just kind of the scale of it, the degree of it is that. Raises questions about where kind of society as a whole is going. Especially I was reading that in 2012, of the 100 largest economic entities in the world, 44 are now corporations. So if you have on the one hand corporations that are increasingly large and influential, and on the other hand you have them still thinking only about their own private good, what is the impact on that as a society as a whole? Who do you have left thinking sufficiently about the common good, the things that we enjoy in common that kind of make this a great society? Is that good for society? Is that even good for business? Is kind of a question I find myself thinking. I wanted to leave you with a little vignette from a little book called Ahead of the Curve. It's by a guy named Philip Broughton. He got an MBA degree at Harvard, and he wrote this book about his 2-year experience getting the MBA degree. And he described at one point, in the winter, which can be nasty in Boston, he paid for indoor parking. He had been parking on the street before then. And he describes the first day he drove into the parking lot by the Harvard Business School. And he said, I was in a $2,000 very old Toyota, and I drive in the parking lot, and I'm going past a brand new BMW, a brand new Lexus sedan, a Porsche, a brand new Lexus SUV, another BMW. So he's kind of stunned, and he finally got to the top where there was a Saturn. He parked next to that. But he was asking one of his classmates, what's up with all the cars in the parking garage? And the classmate said, oh, don't you know about that financial aid trick? Apparently, what happens is that when you submit your financial aid application to Harvard Business School, you have to list your assets, but you don't have to list cars. So you have to list what's in your savings account, checking account, all that kind of thing, property you own, but you don't have to list cars. So what a number of clever applicants do is spend $20,000 on buying a brand new car in the hope of getting $10,000 or $20,000 in financial aid, so that essentially Harvard Business School, through its financial aid, is paying for your new BMW, Lexus, whatever it is. He said that there were only certain pools of applicants who were kind of onto this. It was the applicants who had been working on Wall Street and the consultants. They apparently are the ones you are now also in the know when it comes to that, so you can kind of spread the word on that. So I'm thinking about that by analogy with what Apple is doing, because is that kind of a criminal activity? No. It's what they're doing is consistent with the rules that have been established. They were told they have to list assets. They were not asked to list their cars. It wasn't like they were parking all their income with their parents and pretending they didn't have it that way. They just weren't asked to list cars and so forth. And nobody, putting on my law hat, I would have said, give me your statements going back a year or so I can see exactly when you kind of emptied this savings account on their behalf. So it was according to the rules. They found a loophole. that way. So would I describe that as evil? Would I describe that as criminal? No, but I also wouldn't describe it as admirable. And I guess that's kind of the difference. So to me, what Apple is doing and what a lot of companies are doing, not just them, GE, the vast majority, maybe all, or you said it's not all. You mentioned an example where Amazon was kind of voluntarily paying some more than they had to in terms of sales tax. But would I describe that as evil or criminal? Absolutely not. Admirable? I don't think so. But that I suppose is in the eye of the beholder, and there are different eyes to be beholding here tonight, and that should make for an interesting Q&A session. So thank you very much. Thank you. Okay. Can you come up?
We'll ask our panelists to come
you
up
should
to
be all
the
the way to the
table
right.
here and take questions. Why don't you please stand up and state your question loudly, because we're using the mics in the front of the room as opposed to having them other points in the room. So who will be first here? I think there was a controversial point or two that was raised.
Between the 35% and the 12%? What it really boils down to is that, let's say your taxable income is $1 million. If you're a corporation, you're in the 35% tax bracket. So your tax bill should be $350,000. But on the other hand, you hired some military veterans. You got involved in some energy and sustainable activities. You did some other things that generated credits, like increasing your research and development. So you literally could take that $350,000 bill and reduce it to nothing. The typical corporation, large corporation, will not pay a 35% effective tax rate. They love to point to the graphic because it is a 35% rate. They never want to mention the credits that they're entitled to. There's nothing wrong with the credits. My major gripe is that don't go on talk television, complain about the rate being as high as it is, and not revealing what you're paying in income taxes. And that's what they all do. Maybe not all of them, but a lot of them do, okay?
So 12% is what they're actually
Effective rate
paying.
for the U.S. corporations in 2011 was 12%. We don't have the 2012 figures yet because those returns are still being processed or the information just being summarized.
Maybe some of them should be required to run for president, and they'd have to disclose that. So.
That's right.
Okay, other questions?
Ken, something I wanted to ask you, I was reading something that I don't quite understand, but the corporate tax rate is 35%, the stated one.
Correct.
But more than half of corporations file as S-corps, meaning it's a pass-through, so that corporate revenue is taxed at the individual rate of 39.6.
Yeah.
So there's a proposal to lower the corporate tax rate to 25%. Is that just if the individual rate stays that high, so the S-corp folks are still paying at that higher rate?
The S-corp people are going to pay 39.6, but the typical S-corporation has the ability to pay salaries to shareholders.
Oh, so it goes down
So
again.
when you're talking about a 39.6% rate, you got shareholders' children and that type of thing. Now, there's a reasonableness factor in there, but you could put one of your children on the payroll, and by the way, that's the best place to have a kid, is on somebody else's payroll. You can put a child on the payroll, pay them $25,000 legitimately, and you've just moved $25,000 from basically the 40% tax rate into 15% tax rate. The S corporations also have one other major restriction, and that is that they cannot have any non-resident alien shareholders. So if you're thinking going global, and you've got somebody from Canada or some other country who wants to be an investor, cannot set up an S corporation.
Ken, maybe you should enlighten a few of the people in the room who might not know that much about an S corporation, just, USA Today version.
Sure. S corporation is a lot like a partnership, and that is that you bring together some investors. Essentially, the income or loss from that investment flows on to your 1040. I think everybody knows what a 1040 is. So the corporation pays no income tax at all, the S corporation. As a matter of fact, it could be argued that no corporations pay taxes. We pay the taxes for them. And that's where the issue becomes real sticky, okay? They've got to take resources and pay taxes. Those resources are going to come from their customers, their clients, and that type of thing. The more tax they pay, the less money they have for paying their employees, doing research and development, and paying other types of expenses. But when they talk about cutting the corporate tax rate, that's almost laughable, because essentially, in a lot of ways, the corporations don't really care, because that's going to be built into their price. If it's not built into their price, they won't be in business very long.
Other questions? Jim.
I'm Jim Sida, accounting faculty. Question for Joe. So you referred to sustainability, saying firms are willing to go above the law, engage in sustainable activities. Are they willing to go above the law on the tax side? I mean, to me, with respect to sustainability, to do these activities, I'm not sure if there's not a profit maximization calculus behind it. I mean, they'll often advertise that they're engaging in these activities. Sometimes the sustainability activities reduce their costs, reduce waste, etc. I'm not sure if it's a good parallel on the tax side. I don't see firms advertising, I pay you more tax and I need this. It's a good thing. You should buy my product. I don't think consumers are that passionate about tax evaders. You don't see as many consumer groups saying, hey, you should protest company X because they're not paying enough tax, as opposed to environmental groups that be a little bit stronger to get their constituents to organize around and boycott McDonald's because they're using a certain type of chicken or meat.
Yeah, I think that's a fair point. With sustainability, my point was not so much that per se. What I was trying to get at more is the potential consequences of a general attitude toward that. I also mentioned the example of paying your employees. Take Starbucks as a for instance, providing health care benefits for part-time employees. Sustainability, Ray Anderson, the founder, CEO of Interface, famously said that sustainability done right doesn't cost, it pays. I think that's right. I think that's absolutely right. Starbucks providing healthcare benefits for part-time employees, maybe you get a higher level of commitment, productivity, whatever, but it's presumably not most employees. None of their competitors are doing it. I don't know that people are going to be willing to pay more for their extra double latte or whatever because they do it. Seems to be more connected with the convictions, compassion, concern of the founder, whose father was not treated well by the company he worked for when he became injured and so forth, and didn't have health care coverage, et cetera. So I think it's more connected with that. So it's more of this kind of general concern. A, we're going to focus really just on doing what's best for us, for our company, for our shareholders. B, we're becoming kind of bigger and bigger and more influential, and we'll let the rest take care of itself. I'm concerned about long-term how all that's going to play out, because in economics and elsewhere you famously hear about Adam Smith's invisible hand, which is going to lead individuals following their self-interest to promote the common good more effectively than if they tried to promote the common good on their own. But what's hardly ever discussed is what Adam Smith's understanding of the self in self-interest meant. Because for him, he thought of human beings as by nature concerned for themselves, but also concerned for others. The term he used was sympathy. He thought human beings had a natural sympathy. We would say empathy nowadays, a natural, genuine concern for the feelings, the suffering, the well-being of others. So he was presupposing in a society in which you presuppose sympathy, then following self-interest can lead you as if by an invisible hand. But does the invisible hand work as effectively if there is not as much sympathy? not as much concern for others beyond just myself on a corporate level, beyond just ourselves. I guess that's kind of my question. It's more of a philosophical one. So you're exactly right with sustainability, but saying, can you point to other instances in which corporations make expenditures that are hard to justify as increasing the bottom line, but they do it anyway? I think there are more than a few of those. Anyway.
Brian, I assume, given the current state of Washington, that you wouldn't be overly optimistic regarding, your kind of punchline there. But I did want to share with the group that the G20 met in Russia not long ago, and I'll just read you one sentence from a newspaper article that said the plan at G20 meeting is to tighten global rules on corporate tax avoidance. So this writer took a shot right in the headlines, but the effort at tax reform, if enacted widely, would squeeze more money from multinational corporations and shift a portion of the global tax burden from individuals and small businesses to large corporations. So do you think, Brian, there may be things happening in G20 or Europe that might force the U.S. to do a bit more than we've seen in recent years?
Well, so that that article was positive as far as our current Congress and our current administration. I guess probably like most of you, I would tend to doubt it. I think the challenge is on an individual basis. We talked about this discrepancy between what the rate is and what the effective rate is, 35 versus 12, and we talked about Ken laid out all these deductions, and that there's sort of this sense. This will sound funny coming out of my mouth. I don't mind being a socialist as long as everybody else is a socialist too, okay? And if you read Animal Farm or you remember the old Soviet Union, some are more equal than others. And there's this gnawing sense that other taxpayers have better lawyers and better accountants, and I'm the one paying the 35, and these guys are the ones paying the 12. And it's this corrosive system of too high rates and too many deductions and an inside Washington game. So is it naive of me to say I wish we would get to a flatter tax with fewer deductions? Yeah, but until Congress does its job, I'm not going to advise my client to pay more than it owes.
Relevant to that statement, by the way, I'm paying my pay rate, they're paying that. George Bernard Shaw famously said that any government that robs from Peter to give to Paul can count on the support of Paul. So I think that is absolutely true in this case. Jim, getting back to your point, though, with that, I think that when you phrase it in terms of do you get a boost as a business if you're paying more taxes? No, it'd probably work the opposite way. But I do think when things like GE not paying taxes get in the news, there is a certain level of outrage about that when you phrase it that way. So on the one hand, probably not going to help you. Can it hurt you if you're seen as sort of shirking your fair share? Is there a free rider problem that some people see?
Laura? All right, then we'll get over here.
I can't get away from the comment that Brian made earlier about if $7 billion isn't enough for whatever the number of taxes to be, then what is the amount that they should be giving? And as you were using other examples like sustainability, et cetera, one of the things that came to mind was this idea of efficacy and accountability. And this may be, to his point, why people care
There's a
I
question.
think that's a great point. I was reading something a week or two ago saying that in the U.S. the public approval rating of Congress is now lower than the approval rating of North Korea. So to me, part of the ethical question is how effectively is the government being run, such that people have such little faith in it. So that's a fantastic question. And Brian mentioned, government spends too much. Absolutely true. I had a friend who, after graduating, started working on Wall Street, and he said, I became a Republican the day I got my first paycheck and saw how much was being taken out. So I kind of sympathetic to that. What I find myself thinking, though, is in the the recent bailout, remember that it was a number of the companies, after getting the government money, paid really big executive bonuses. And then there was kind of an outrage about, government's not spending its money effectively, but are the businesses? I mean, when, people, we have to pay that much, otherwise we lose them. Okay, you're going to lose the people who ran you into the ground. How big a loss is that? So are big businesses doing a better job? Maybe they're both doing a bad job, I don't know. But, which I guess is an argument for not wanting to give money to either one of them. But I don't know if anybody's got a shining record on that allocation of resources, but it's a great point.
Last question here in the middle.
I have a question for Professor Holt. You mentioned a point at the end, which I agree with, that companies need to kind of decide the level of morality and justice that they want to pay, what they think that level is. Can they still do that while minimizing their tax and deciding where to distribute on their own? At least in the U.S., I know you gave the Nigeria example, but our government could be a lot smaller and still maintain our highways.
Absolutely.
They're providing a lot that other countries don't provide. How efficient are they doing that? And companies do it themselves and still be moral and just, more efficient?
Yeah, no, it's a great question. And when I'm talking about, the level of ethical aspiration, how good a company do you want to be? The question is really, to what extent are you motivated by concern for the public good rather than just a private good of your firm? I mean, you can make an ethical argument that we want to be as concerned for the community as possible, but we think government is corrupt or ineffective. So we actually think it would be reckless to give them more money at this point. So in terms of how do you measure that level of ethical commitment, I wouldn't, I'm also a lawyer by training. I was a corporate attorney, in fact, for about 6 years. So I wouldn't recommend paying more taxes than what is required. But the question would be, are there other ways in which you are benefiting folks going beyond your company, and is that part of your purpose? Is that part of your motivation? It's interesting, this being Notre Dame, the U.S. Catholic bishops wrote a letter on the U.S. economy in 1986 called Economic Justice for All, and they talked about when is management a vocation and not just a job or a career. And the criterion they gave is that management is vocation when those pursuing it are motivated by a concern for the common good and not just the private good of their firms. So when we're doing what we're doing, are we trying to do well for ourselves, provide for our loved ones, provide our shareholders a fair return, et cetera, but we also are motivated by the good of the communities in which we operate, the good of our customers, the good of our suppliers, et cetera. So to me, that's the measure. There are a spade of different ways in which you could promote the common good. My question would just be, are you trying to do that some way? Under certain circumstances, taxation might not be the best way. I found myself wondering if we were having this debate somewhere between 1942 and 1945, when we're fighting World War II and trying to stop Hitler and everything, when the corporate tax rate was?
Very low.
50%, actually. 42 to 45, it was 50%. Would we be having the same debate? Because my guess is that back then people were a little more kind of, let's contribute to this. And sociologists and others will point to a decline of civitas in our day, a kind of decline of public spiritedness. So is it a different debate today? And part of it, government has themselves to blame in part for that.
Well, that brings up a point, Joe, and that is that we're still fighting a war in Afghanistan. For a while, we were fighting a war in Iraq and Afghanistan. Most U.S. citizens felt no pain from that war unless they had a child or a relative in the military service. In years past, when we were at war, as Joe pointed out, the tax rates went up to pay for the war. George Bush dropped the tax rate over 2 wars, and that just didn't make any sense to me. The people in this room, probably the only way they knew about the war, same way I knew about the war, was they watched it on television. They did not make any sacrifices. That really bothered me when the taxes were cut. It also bothers me when the taxed enough already people say we're taxed enough already. When the tax rates on individuals and corporations, the effective tax rate for 2011 is the lowest it's been since 1958, 13 years after the Cubs showed up in the World Series for the last time. Okay, that's a hell of a long time, folks.
On that note, I think it's on a positive note we should end. Please join me in thanking our panelists for an excellent discussion. I'm sure they're willing to stay around if any of you have individual questions. The next Berges lecture is September 30th, and more information will be forthcoming. John Donovan from AT&T.